As we count down to the close, one of the stocks we've got our eyes on is Apple. After closing at a multi-month low, Bloomberg is reporting that the company is exploring home robots as the next big thing. This, of course, after Bloomberg reported that in February they officially closed their program for a car. This was something that we've been waiting for years, I think a full decade for, and never really materialized. Now, apparently, it's a robot that's going to follow you around your house. You got a couple of people to do that, but they're certainly not that helpful. They are my children. But the stock, going back to Apple, didn't really, move much on this. And I think investors are probably still waiting to understand. There's no timeline in the reporting as to when this might be revealed or what sort of features it might have. But certainly there have been questions about what is the next big thing for Apple. Interestingly, iRobot, which we know Amazon did not end up buying, iRobot shares jumped on this. Well, if Apple thinks it's a good idea to buy a home robot, iRobot maybe has a little bit of a lifeline there. So we'll continue to watch those dynamics as they play out. We're also watching, of course, next week is the Bank of Canada rate decision. And something very interesting is happening with rate expectations, largely in the U.S., but to some extent here as well. We walked into the year expecting a number of rate cuts, a big slowdown in the economy. And we did not really get that. Growth has held up, especially here in Canada. Growth has come in better than expected. Job growth continues to be above consensus. What is happening in Canada's economy? We've got Guy Cormier, President and CEO of Desjardins, joining me on the desk. Great to be with you again.
It's a pleasure again.
So what is happening in the Canadian economy? Because the data says there's resilience.
Well, I think we're all surprised. And one of the reasons is why it's still working on is that people works. Yes, we have seen some layoffs, but many people still have their jobs like they used to have in 2023, 2022. So as long as employment rates are, quite balanced, people, when I look at Desjardins, people are really able to pay their mortgages. We see some pressure on credit cards, specific commercial loans. But honestly, so far, people can balance their budget.
Is the credit card sort of a first warning? Because that's typically people are going to get slow on their credit cards before there's issues with their homes.
Absolutely, absolutely. The first signal is most of the time credit cards, car loans. That's the first signal. Mortgages will be at the end. But even though all the floating rates that we had to renew in the last year, we called more than 70,000 members at Desjardins just to advise them and help them. And everyone has been able to find a solution. So honestly, right now, I think we see the first signal, and then we saw inflation rates going down. But there's still a lot of pressure, of tension in this system, still a volatility. So that's why I think we can see some damage still in 2024 regarding maybe default rates. And so we have to be careful. And
certainly we see that in the other banks that are public, they take up their provisions for credit losses to kind of buffer against that. And you mentioned, the consumer is one part, but there's also some commercial real estate exposure. We just got a read of vacancies in Toronto, still very high. How much more trouble do you think that sector is?
Well, we have seen in our commercial loan portfolios a change at the beginning of 2024. In the last, let's say, 2 months, we have seen an increase in more companies with difficulties, not necessarily on solvency, but really challenge moments where we have to help them and work with some partners to try to figure out how we can maybe reshuffle a few things. So, and there's some specific sector. It's not all the industries. You go in the clean tech right now, in AI, there's industries that are going very well, but some others, like you just said, construction, real estate, everything that is a bit more luxurious. And so some industries are under pressure, and we're helping them. And I think they'll be under pressure for 2024.
In your assessment, how desperately does the Canadian economy need a rate cut?
Right now, I think the jury is still deliberating. There's two sides on this medal. The first side is they're real people, real citizens, real Desjardins members are struggling right now. You know, their monthly payments have increased by $600, $1,000 per month. So they need a break. On the other end, when you look at inflation, when you look at stock market, when you look at real estate market, you look at the volatility in Toronto, honestly, as soon as you send a signal of reduction in interest rates, how's the stock market will react, how the real estate market, all affordability will react. So I understand very well that the Bank of Canada is careful right now.
We don't have as many sentiment indicators for our TSX as they do in the U.S., you know, fear, greed index, panic, euphoria. But I do get the sense that even though we hit some all-time highs on the TSX, it maybe doesn't feel like that bullish environment in capital markets. We haven't seen any IPOs, a lot of take privates.
Yeah, I agree with you. Right now, I feel that people are already, many investors are in a mindset of when I look at 2024 to 2030, 2035, I feel that in front of me, there's a pathway of growth in front of us. So people are investing, not because they understand that 2024 could be a rough path and there's still volatility and some risks, geopolitical risk and climate change risk. But on the long run, the stock market will probably bring returns like we have seen in the last 5-10 years. So that's why people are still investing in the stock market, and there's still liquidity in the system.
Away from the markets, we've got a federal budget that is due to come down in a couple of weeks. Clearly, housing is going to feature prominently, but when I talk to economists, they want to see more about competitiveness and productivity in particular. And that has been a real call out in Canada, just how much productivity has fallen in this country. As an executive who wants to see growth in this country, what do you think can be done about that?
Well, I think first, it's not one or another thing. We have to work on affordability, on climate change, and on prosperity and on productivity. And even though you have companies that are more and more productive, if you don't have houses for the employees, you have another problem to manage. So I think we have to do as much as we can. But it is sure that on productivity, and it's not a question of how many programs that are there on provincial governments and federal governments. Programs are there to support SMEs and companies. But it seems that we have a real problem to really tight and connect the dots here about what is available to bring more productivity and how can our SMEs and companies can work and find the solutions. So I think one way is really to bring more closeness about everything that is available to for our SMEs, the first thing. And the second thing is sure that we have to invest so much more in technology transformation in our SMEs and every company's AI, we have to go further on that. And I think we working with university, connecting together, more investment in R&D, I think we should continue to do more. That's what we're trying to help at Desjardins.
As a business, how are you finding you can see how AI could help your business, how it could generate a bunch of cost savings? Are you implementing it or still kind of looking at it?
No, we're implementing it. It's sure that there's a big difference. There's AI that we are using for the last 3 to 4 years, and there's generative AI, which is different. Where we're having case studies right now at Desjardins, really specific case studies regarding default, fraud, call centers, where we're working on specific pilot right now. But we are careful because we want to be sure that all our members will look at it about ethics, about all the things that we could be scared of. So right now we are investing really aggressively in AI. In our operations, how can we reduce costs? How can we bring more? How can we simplify our processes? But we are careful at the same time just to see what's the real traction there, and is there a real value for efficiency or for member satisfaction? But the pathway is quite clear in the next few years.